Hello, welcome to the European Open briefing for Tuesday, March the 21st. I'm Rafi Badian, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So it's a fairly quiet start to the day. We're seeing pretty much the impact of what happened yesterday. We had Fed Speaker Charles Evans speaking yesterday, which, well, he pretty much reiterated that we're likely to see just 3 rate increases in total in 2017, and that led to the dollar slipping to 6-week lows. The euro, on the other hand, hit a 6-week high against the dollar after yesterday's TV debate between the French presidential candidates. That saw Macron being the main winner out of that debate. The pound is not doing too badly after yesterday's drop after Theresa May said that she will trigger Article 50 on May 29. It's holding comfortably above the $1.23 level, although it's down from yesterday's earlier highs. The Australian dollar has eased off a little bit from 4 months highs following the release of the RBA's meeting minutes. That shown that there were, despite concerns about the housing market that's preventing another rate cut, there is some worries about slowing income growth in Australia that could hit consumption. And in commodities, oil prices are a little bit firmer this morning on hopes that OPEC may extend its output deal after it expires. The current agreement expires in June. But let's start with the dollar here in the chart. We have the dollar index in purple and the dollar yen pair in orange. We can see against the yen, the dollar is actually firmer this morning after hitting a 3-week low yesterday of 112.26. It's currently trading around 112.80. The dollar index, on the other hand, hit a 6-week low yesterday following comments by Charles Evans, the Chicago Fed president, who pretty much reiterated expectations of 3 rate hikes in 2017. But he also appeared to agree with Yellen's comments about a symmetric inflation target, that it wouldn't be such a bad thing to let inflation rise a little bit above 2%. So this has added to the overall slightly dovish tone of the Fed following last week's FOMC meeting. But we're going to hear more from other Fed speakers this week, including Yellen as well. So all of those will be watched during the course of the week. But let's move on to the euro now. We can see the euro has come close to hitting the 1.08 level against the US dollar. And this comes after yesterday's TV debate in France, where the centrist candidate Emmanuel Macron was seen as the most convincing out of the 5 leading candidates. And Le Pen and Fillon, who they were actually tied in 3rd place based on the TV debate alone. And this has added to the optimism about the French elections, adding to the boost from following the Dutch elections, where the far-right party lost out to the centrist party there as well. So there's growing hopes that the Le Pen won't be the winner in France's presidential elections due to take place at the end of April. Also worth mentioning that adding to the euro support in recent days is the expectation that the ECB may actually start to raise interest rates before it has ended its asset purchase program. Possibly even this year there could be a rate hike in the deposit rate of the ECB. And those rate hike expectations also apply to the pound, because Bank of England's meeting last week, the minutes showed that there's growing concern among policymakers within the Bank of England that rates might have to go up soon to rising inflation. We've got inflation data out in the UK due shortly. CPI is forecast to rise by 2.1%. That's just about the Bank of England's 2% target. The Bank of England has already said that it's willing to tolerate a little bit of overshoot given the slowdown or the potential impact from Brexit. And talking of Brexit, yesterday we had a confirmation by the British Prime Minister Theresa May that she will trigger Article 50 on March the 29th, and we saw cable dropping from about 1.24 to around 1.2330, though it's rebounded a little bit this morning, currently trading around 1.2375. Moving on now to the Australian dollar. Yesterday it hit a 4-month high. The Aussie has been boosted by the weaker US dollar, but also due to higher commodity prices, which have also been benefiting from the softer dollar. We had the RBA's meeting minutes out early today of the March policy meeting. The RBA continues to be worried about the risk from household debt and particularly the build-up of risks within the housing market. Though if the central bank was to take further measures, macroprudential measures to rein in house prices, it could potentially lead to another rate cut by the RBA, because there's been signs of some weakness within the labour market. But also the RBA in its meeting minutes said that they're worried about slowing income growth, which could affect consumption given the high household debt. So obviously households would rein in their spending given their high debt levels if their income wasn't rising fast enough, and that possibility of perhaps that a rate cut cannot be totally ruled out in Australia at the moment. We saw the Aussie slipping off a little bit. It's currently trading just above the 0.77 level. And quick look now at commodities. We can see oil. It fell. It extended its losses yesterday. It's rebounded a little bit this morning. Currently trading around 48.50. That's US crude. There seems to be growing talk that OPEC members at least are willing to extend the output deal beyond June if non-OPEC countries such as Russia also sign up. Though that could be difficult given that Russia seems to have some reservations about that. And overall, there seems to be little effect of the output deal. Oil prices continue to slide, and they've been consolidating since the deal was announced back in early December. That's due to the huge size of the supply glut to begin with, and also rising production in the US. And last week we had the oil rig count in the US, which showed that active rigs in the United States are continuing to increase. And also a quick mention about gold, because we can see there was a bit of tumble earlier this morning or late yesterday, depending on what time zone you're looking at. This appears to be mostly due to a technical correction, but also the French election does seem to have weighed on gold price a little bit, because it's taken some of the risk away from the euro, and that in turn has led to gold becoming a little bit less appealing, which has offset the impact from the weaker US dollar. And today's calendar, we can see here that the main data will be UK inflation numbers, and in Canada we're going to have the retail sales figures for January. We're also going to have the dairy auction which would affect the New Zealand dollar potentially. And in terms of speakers, we've got Bank of England's Mark Carney and the New York Fed President William Dudley. They're due to appear at a banking event in London where they may mention something about monetary policy. That's it from me. Thank you very much for watching, and have a great day.